Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'm excited to share today's top stories with you. We're starting off with a look at the Indian stock market, where the Sensex has rebounded after a period of volatility. According to experts, the market is expected to continue its upward trend, driven by positive sentiment and strong earnings reports from key sectors such as banking and finance. The Bank Nifty has broken out to new highs, with Axis Bank and other private banks leading the charge. But what's driving this rally, and can it be sustained? Our guest expert, Suresh, will join us later in the show to share his insights on the market trends and what investors can expect in the coming weeks. We'll also be discussing the latest earnings reports from top companies such as Infosys, Wipro, and NTPC, and how they're impacting the overall market sentiment. Meanwhile, the Bihar election outcome has failed to trigger a major market reaction, as the result was widely anticipated and largely priced in. However, the verdict is seen as structurally positive for sentiment, especially for infrastructure, PSU banks, and state-linked sectors. As we navigate these complex market dynamics, it's essential to stay informed and up-to-date on the latest developments. That's why we're here to bring you expert analysis, insights, and news from the world of stocks and finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of tech and finance, where Amazon is making waves with its new car buying platform, Amazon Autos. This innovative service is changing the game for consumers in Los Angeles and beyond, offering a seamless online experience that lets you browse, purchase, or lease vehicles from hundreds of options. From new to used cars, electric vehicles, and even certified pre-owned models, Amazon Autos provides transparent pricing, eliminating the need for in-person negotiations at dealerships. You can apply for financing online, add protection products, and even get a fair trade-in value for your old car. The platform has partnered with local dealerships in over 130 cities across the country, making it easy to schedule pickups and test drives. But what does this mean for the future of car buying? Will traditional dealerships be able to keep up with the likes of Amazon, or will they need to adapt to stay competitive? On one hand, Amazon's platform offers unparalleled convenience and ease, which could potentially disrupt the entire automotive industry. On the other hand, some argue that the personal touch and expertise offered by local dealerships are essential aspects of the car buying experience. Amazon has also partnered with Hyundai to offer brand new cars online, featuring models like the IONIQ 5 and Santa Fe. This move is seen as a strategic play to expand Amazon's reach into the automotive market and provide customers with more options. As we consider the implications of Amazon Autos, it's essential to weigh both the benefits and drawbacks. While some may see this as a revolutionary step forward in e-commerce, others may be concerned about job losses or the potential homogenization of local businesses. Ultimately, the rise of Amazon Autos raises important questions about the future of retail, technology, and consumer behavior. As we continue to navigate this rapidly evolving landscape, one thing is clear: the way we buy cars will never be the same. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the major market movers that caught our attention. We've got a trifecta of news that's got investors on high alert. First, gold prices took a significant hit, dropping 3% due to hawkish comments from U.S. Federal Reserve officials. This has dimmed hopes for a December interest rate cut, which had previously boosted the appeal of non-yielding gold. Now, let's dive into the details. Spot gold fell to $4,092.27 per ounce, while gold futures for December delivery settled 2.4% lower at $4,094.22. The market's sell-off was triggered by Fed officials adopting a cautious stance towards additional monetary easing, with market expectations for a 25 basis point rate cut next month falling to nearly 46%. In related news, the longest U.S. government shutdown has created a major data gap, leaving both the Fed and traders without crucial information ahead of next month's policy meeting. This lack of clarity has investors on edge, as they had hoped fresh data would show a slowing economy, giving the Fed room to cut rates in December. Meanwhile, physical gold demand across major Asian markets was subdued this week, with spot silver, platinum, and palladium also experiencing losses. It's clear that the current market environment is highly volatile, with investors scrambling to adjust their portfolios accordingly. As we close out today's show, it's essential to remember that investing in any market comes with inherent risks. It's crucial to stay informed, diversify your portfolio, and make decisions based on careful analysis rather than emotions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.